What an incredible week it's been since we last talked. We've seen the stock market drop over 1 trillion with a T in value at the end of last week. And yet people, I teach all the time, where did that 1 trillion go? It doesn't exist. It never did exist. All it is a bookkeeping entry that's in there, and then it goes away. And you can't cash it in for anything. It's a piece of paper. So $1 trillion goes away. The stock market now, read my lips, is now back dead even, 24,700 where it started the year. So over the last 3 or 4 weeks, it's lost over 10% and over $7 trillion in value. And yet the gold market that's had a terrible year is down 4% for the year. Just 3 or 4 weeks ago, gold market was down 10%, stock market was up 10%. There's a 20% difference. Now gold's up to 1250, stock market's at 24,700. So now they're only 4% apart, not 18 or 20% just a few weeks ago. Why is that? Central banks have exploded in buying the ETFs, GLD, that we've got an ETF better than that at a lot lower cost, but they're exploding. Stockbrokers that don't take physical possession, that buy paper gold, is exploding. People are moving into gold at record rates, and we sit on our thumbs in America and look at it. Let me give you a couple economic figures to give you a little stirring. First of all, the consumer debt last month hit $4 trillion for the first time in the history of civilization. 4 trillion with a T. The consumers in America are buying money and running debt up at an unprecedented rate. Over the last 12 months, from the end of November 2017 and the end of November 2018, it's up 7.7%. Once again, this is play money. It's not real money. It's bookkeeping entries, and the debt gets bigger, and the federal debt gets bigger, and the bond debt gets bigger, and it's all going to come crashing down, and there's going to be a reset. And there's going to be a reset maybe in the next 12 to 24 months, according to a lot of economic experts that know a lot more than I do. But certainly I can see this because I've been through it, haven't been in this business since 1976. And my occupation did not even exist until late 1972 or early 73. So I can call myself an old timer because I've been in it. It'll be 43 years in March. And I've never seen anything like it. So now we look at the jobs report last week was awful. We only created 155,000 jobs in November. That was about 30 to 40,000 less than anticipated. So now people are laying people off. Look at General Motors and look at the layoffs there. And we're going to start seeing car companies contracting. Interest rates are expected to be 2.5% by the end of this month in December. As I record this, it's the 12th day of December 2018. And so we look at that, and then we realize that the average interest rate when we've gone into the last 3 recessions, it's been 6.5% federal funds rate. It's only 2.5% if we factor in 1/4% later this month. In every other recession, to get the economy going again, they had to drop interest rates 4%, from an average of 6.5% to 2.5%, and 4% drop stimulated the economy enough to get it going. How are we going to drop 4% when the interest rate's only 2.5%? People, you better get ready because it's going to be a staggering economic movement over the next 12 to 24 months. And you're going to see gold go to numbers you can't believe. If you're on our alert system, you received an email earlier this week. It was on King World News about Michael Oliver. Highly respected, a guy I followed for 30 plus years. He's one of the market timers for the money managers. In other words, he doesn't do just gold. He does stocks, bonds. He tracks everything. He says that a 5-year high in gold will be taken out in the next 50 trading days. So we're talking about 1380 or 1400 from 1245 where it is today. So it's about $150 up over the next 49 days is what he is proposing. And if you don't like, go look him up on the internet, Michael Oliver, and look at his credentials. And you'll see this isn't a gold person making this prediction. He sees what the central banks are doing. He sees what is going into ETFs. I can tell you from where I sit, our storage program has a storage rate far less than 50% less than if you go into GLD or an ETF. Plus in ours, you have your own physical metal. It's important that you have physical gold and silver and what is happening because the shortage is so severe that you look at these ETFs in gold and silver and they're multiplied up 7 or 8 times. In other words, you can't take gold and silver out of them. You've got to liquidate and take the paper money. So if you don't know about our storage program, the #1 in the world, give us a call and we'll walk through that. And if you move $10,000 or more of new money, you can take wherever you have it stored and we'll get it moved to our storage program at the huge reduced rates. We just had a client move several $100,000. He bought 25,000 new from us and moved several $100,000. And listen to this, he saved 55 basis points on $600,000. It's over $3,000 a year, every year he saved by coming into our program. So hopefully, if you're looking for a precious metals IRA, we can help you get a custodian. We can be your manager of it. We can work with you on how much gold and silver to put in it. We can be your broker. So if you're thinking about a self-directed precious metals IRA, give us a call at 800-247-2812. That's 800-247-2812. So I think I pretty much have hit it all. I didn't mention that Brexit postponed their vote, the final Brexit, the exit going on in England. But people, I'm telling you, gold is going to be the cat's meow. We also didn't mention, beside that, real estate has started down. You can look at the Chicago Real Estate Index. You can look at other indexes. As interest rates have been going up, it's costing more. Real estate's been coming down in many areas of the country, and it's probably going to get worse. So make it really honest with you. There's not been a good investment this year. Gold's down a little bit, silver's down a little bit more, stock market's basically even, bond market's down, and many of the commodity markets are down. So where do you go next? And we think we have part of it figured out. But as I've always said, you've got to look to Ecclesiastes 11:2 and take heed, because it says that put your assets in 7 or 8 categories, because no man knows what disaster will come upon the land. And we're going to have a paper mountain disaster. None of this stuff is real. It's all perceived. Because as I've told you, the net worth of the world is not even close, because as soon as 2% of the people exit, because remember, in any trade, there has to be a buyer and a seller. And what happens immediately when the market moves down 2% is they lower their bids dramatically and that paper debt disappears. That's how you've lost. If you've been in the stock market, that's how you've lost 10% over the last few weeks. So think about it, use your mind, be working, because I can promise you, as a 43-year veteran in the financial markets, as an investor and a consultant and a precious metals dealer, you're going to see in the next 2, 3, 4 years movements that you will not comprehend. And one of the biggest will be in gold and silver. With this week's Precious Metals Market Update, this is Tom Cloud signing out.